Good morning everyone, Billy here from iTradingU, and I want to talk to you today about how can we use options in small accounts to make the best of the money that you have available to invest. Quite often that is a very important question to answer because as with everybody here, we would like to make money grow as quick and as fast as possible. So I would say the biggest problems that a new account or a small account has is the fact that with a small account, you don't have the ability to just choose all the stocks that you wish. So what I mean by that, in some instances, the stocks are purely just too expensive. The other problem is that you can't diversify properly. With small accounts, sometimes you also have a problem that your returns are relatively small, which means the road to financial growth takes a lot longer than one would hope. I'm going to quick go through how options can solve some of those problems for you. Now, just a risk reminder, trading options is completely different to what you're used to in trading stocks. So you can in fact create sizable losses if you don't know what you're doing. Fortunately for you, you're with iTradingU and we don't recommend anything that's too risky for you. In fact, I would actually recommend you speak to your ITU mentor who will go through it with you to make sure that you are ready for options. And if not, definitely join us on one of our upcoming options workshops. Tons to learn and tons to explore. What I want to highlight here is shares with fairly sizable prices are often out of the reach for small accounts. Because look at this, if you had $2,000 to spend and you spent all of it on the shares, you could only buy 48 Microsoft shares. In fact, you can only buy 3 Apple shares. Now that's if you spent your entire $2,000. What you'll learn from us is that we propose quite a stringent risk management policy, and we would never recommend putting all your money into one specific trade. So what we typically suggest is no more than 1% loss on any one particular trade. So what that translates to is $20 on a $2,000 portfolio. So what I looked at here is just said, if we assume the stock moves 5%, how much does that $20 allow me to buy? So in other words, if the stock moves down by 5%, I won't lose more than $20. So I want to bring your attention to the last column. It says you should only buy 9 Microsoft shares, you should only buy 11 AT&Ts, 1 Amazon, and effectively no Apple, because you can't afford the risk of owning an Apple. If it moves by 5%, you'll lose more than your 1% capital. So you can see immediately for a small account, that creates some headaches. So how do we fix that with options? I use the same price methodology with options. The key difference here being is I'm looking at a 5% movement in the options price. And it's important to understand a 5% movement in the underlying doesn't equate to a 5% movement in options price. That's something you'll learn as you go through one of our courses. Just for purposes of illustration here, I want to say you're currently invested in the option itself, so you are withstanding a movement in price of the option price. So again here, same type of scenario, same 4 stocks. I used strike rates for 2 months out. Why 2 months? Because it takes you past the serious time decay that exists in month 1. Don't be intimidated if the terminology sounds funny. I guarantee you'll become more familiar as you stick around with us. You can see the dramatic decrease in price. So for an option on Microsoft at $41 a share, so this is you buying a call option allowing you to own Microsoft stock at $41, only cost you $1.72. So if you go right back to the right-hand side column there where it says how many options should I buy, keeping in mind our risk parameter of $20 per 5% movement, you can see that you can afford to buy 232 options. Even in this example, you have 21 Apple shares, which is much more than the Apple shares that you could buy outright. I'm using extreme examples here. I'm saying, what if the stock price screams up by 100%, just to see how the dynamics work here. The top graph shows the actual stocks. So you can see stock price for Microsoft goes from $41.35 to $82.70. You own 9 shares, so your profit is $372. On that same movement from $41.35 to $82.70, remember you own a call at $41, which means you can buy the stock at $41 and sell it at $82.70, but you own 232 options. So you can see in your example, instead of making $372, you make $9,674. Now again, I want to stress this is not showing you real examples, it's not anything actual, it just shows you potential in an extreme event where the market price goes up by 100%. But the point being here is I wanted to just show you how dynamically options can change your access to bigger stocks or bigger quality stocks. And in addition, because you have access to more stocks, you control the value of more stocks, the profitability also increases quite a bit. In percentage terms, you can see going from 100% up on your stock portfolio, you're in excess of over 1,500% growth if you had used options for that same investment. The single biggest risk that I'm not addressing here is the fact that if at expiry the stock price isn't above your level, the option is actually worthless. So in this example, had you owned the stock and the stock goes down by 10%, you still get some money back, right? Because you can sell your stock and get some cash back out. When you bought an option with that same amount of money, the option is worth zero. So in other words, no cash back. Once again, please don't be intimidated by this. Once you start doing option courses with us, you'll understand all these risks and how to mitigate them, and you'll understand the value of adding options to your portfolio. Thank you very much for joining us at iTradingU.com. Below this blog is a space for comments, so I would really like to see your comments on this video. Anything upcoming that you would like to discuss, if you want us to address anything in particular, please pop it down there and we will have a look. This is Billy from iTradingU. Speak to you soon.